What's up, dude and dudettes? It's Dude here with Due Diligence. I want to let you guys know that we are not financial advisors, therefore we do not give financial advice. We are entertainers though, so therefore this video is for entertainment purpose only. Remember to like and subscribe.
How's everybody's evening? Welcome to Due Diligence Evening Show. And today's star is always and probably will be our main topic for the next 2 days until the weekend. It's AMC. And as you can see, today AMC started at around $35 mark, all the way up to the close where it closes around $66, which is almost 100%. 100% gain is a lot in terms of any stock gain. And from my previous experiences, if so, let's just do a pretty realistic talk here because a lot of YouTubers are hyping you guys up and saying, oh my god, AMC is going to 10K. You know, some are saying they're going to 100K per share. First of all, that's literally impossible because there aren't that much money in circulation. Even the Fed cannot even pay that much money. That's ridiculous. That market cap would be in the trillions. It's totally unreasonable and it's totally not going to happen. That's why later on in this video, I'm going to talk about a realistic price projection for AMC in the future. You know, if quote unquote short squeeze is actually going to happen. And I actually have evidence that showing that short squeeze actually sort of started a little bit. So going back to the 100% gain, right? So most of us have 100% gain if you buy at 35 and at the end of today you have like 66. So basically you double your portfolio value. And from my previous experiences, if you see like all of the volume spikes today, right? Like over here and over there, if you go on the daily chart, you will see that we have a significant increase of volume today compared to the volume from yesterday. So I mean 100% gain is justifiable, but if we want to go even higher, there might be some problems tomorrow because in order for us to break the $82 line, or for us right now, our problem is actually breaking the $72 line, which is right around this point, right? That is the upward pressure. That's also the point where most of our stock options on highest price or highest strike price is at. So if we actually manage to go over this $72 line, that means we're potentially going to see a bigger gamma squeeze tomorrow or maybe the day after tomorrow. But as you can see, the aftermarket movement around here, this point, the momentum actually slowed down compared to what we had yesterday. And you will see you have a narrow tunnel. You have a narrow support line, which is the range of support line is all like $2 because this is the $62 line, this is the $64 line, and you have the upper $68 line, which is a significant increase, but not really that much. So there's a $2, this is $2 range, and we have a $4 range over here. And in order for the stock price to even go higher, we have to see either a similar volume tomorrow, and B, we have to see similar sentiment. For example, if all of you diamond hands, right, the diamond hand holders, if you guys start selling, things are actually not going well. Because think about it, if you're a hedge fund, right, previously when you're shorting stuff, the stock is around $6. So the margin of how much money you can make is from $6 to $0. So the maximum upside for you as a short seller, you have $6 per share to win as a short seller. But when we drive the stock price even higher to $60, you have a $60 range of making that profit. Essentially, if somehow the hedge fund guys manage to drive the stock back to $0, they have basically a 10x upside, right? For us, it's a 10x downside, essentially speaking. And that's why we see actually some hedge funds are doubling up. And I'm going to show you some evidence that I think tonight, especially this volume spike, is actually a very small amount of people actually cover their shorts. And let me show you that real quick. Let's just reiterate. First of all, I am not a financial advisor, and this is not financial advice, guys. And every data points are personal opinions, and all of this are for entertainment purposes only. And of course, for shits and giggles. So, after market closes, I did some math on my own, and I realized that, the realistic final price, because I used a model that counted on GameStop's previous experiences of going from say $23 to around $300, and I added up my own hypothesis and discount. So the realistic final price here is not 10K. Nope, not gonna be that. It's gonna be about $285. Okay, right here. And if we applied a discount, we probably will see a price somewhere around $250. So for those of you who have a average holding of $70 right now, your total upside is going to be $180. Okay? And for those of you who started at $6, your maximum amount of total upside is probably going to be around $174. And I could be wrong, but let's just be honest, most of the time I'm right, right? And as a rational investor, because what we are doing as a collective, as the ape collective, is we're trying to squeeze out the short sellers, right? So the previous short ratio is around 22%, like average per volume saying. But you have to do a cumulative math, right? So the average total short volume is around like 21% or like 22%. And if you actually take a screenshot of yesterday, the short volume is about 19%. And the total short volume from today to yesterday, or yesterday to today, actually increased by 2%. But today, around the market close, you see a reshuffling of short ratios from 19% back to the ending 21%. That means there are 2% that shuffled, which means there are 2% that actually covered. So if those of you on are watching other people's YouTube channel and they're saying, oh my gosh, short squeeze haven't even started it. Well, let's just say this is a small start. Right? But as a rational investor, because this channel right now, I don't really have a lot of subscribers. I don't need to worry about, a lot of people are, selling everything. And even though I believe in the AMC, social movement, at the end of the day, we still need to make sure that we don't expose ourselves to a lot of risk. And as you can see, AMC is actually a pretty risky investment right now. So a single day max downside for AMC is about 60%, which means the potential premium we're paying for holding the stock is actually 60%. So what does that mean, right? So let's say right now the stock price is around 70 bucks, but in reality it's like 68. But as a lazy Asian, I kind of just do want to do my math in my head. So if you do the math in your head, you will realize that the actual price right now is about $20. That's a lot. That's like $42 is just like somewhere, right? Like $42 are there to lose. So let's say tomorrow, all of our diamond hand friends, or us, because I'm holding it, right? So if just a tiny bit of us decides to sell the stock, we might be facing a maximum downside of 60%. That means 60% of your total portfolio in AMC is gone. Just like gone in an instant. You're gone in an instant, right? And then the total top side final, which is driving from this number, will be $100. So even if the price we jack it up to $250, the real value of the stock is around $100, and it's still considered overvalued. So let's put this into perspective. When we started this journey, right? I mean, I didn't really start it with you guys. Like, you guys are great. Started at $6. When you guys are doing the initial short squeezing, I was probably just still eating popcorn somewhere on my bed and weeping about the fact that I didn't get into Stanford's PhD program. But back then, it's $6. right? $6 ANC, what that equals to? That's probably like a cup of coffee. It's okay if you lose like a cup of coffee. Some people like put down like, 1,000 share, like $6,000. Basically, that's around like 3 years worth of coffee, right? For me, as someone who grown up in a poor family, I usually, because when I was really young, I usually say that my favorite food is kebab actually. So I usually calculate everything in kebabs, and I usually be a very choppy kid, and my meal is about like 10 kebabs, and $70, the $2 per kebab, it can buy me 35 kebabs. And as a little kid who's chubby, who weighs around 250 pounds, yes, I used to be super chubby. That's around 1.5 meal for me. Okay, I know I eat a lot. And if you guys don't count in kebabs, right? Because I live off of kebabs. You guys probably don't live off of kebabs. So if you guys don't live off of kebabs, that's $70 right now per share. Like one share of AMC literally equals to 2 days of regular college students' living expenses. And which, if you're in college, you're probably gonna buy some condoms. So that's about $10 or 10 bags of condoms. I'm not even counting taxes, right? Taxes are excluded right now. And almost a tank of oil before, around COVID, because right now oil prices are actually increasing. That means the entire inflation, and we're in an inflationary economy, right? And if those of you who are actually want to go on a date, because I'm single, so like I care about dating expenses, because dating is it's hard and it's expensive. That's about like one date. It's not even a date in California. Usually a date in California, if you add it up, like one entree is like $20 plus another $20, like $40, and you pay like a $20 tip. That's what, like $48 now. And you have to probably, if you order a drink, that's around like $70, right? So the total stake and total risk actually increases. And if you look at, if we there are around like 2 or 3 million retail investors holding or have diamond hands and holding AMC right now. I mean, at first they probably have a 6K portfolio, and right now it's about 60K. Money feels different. In my personal opinion, right? I started trading around like 5K accounts to now maybe 25K account and maybe like 50K account. You have to go through a mental barrier every single time you upgrade, right? It's the same thing here. Like right now, it might not seem a lot of money for you to buy in one share of AMC, because you essentially made 56 grand if you started with 6K and you just YOLO'd everything in AMC. But when the stock price goes to $100, it's a total different story. And I believe at $100, some of us is gonna fold. I cannot speak for everyone, right? Because I firmly believe in diamond hands. That's why at 100 probably not gonna fold either. But for some of us who are weak, not really weak, they're just like being realistic. $100 is where massive psychological stuff happens, right? You'll see some people selling, and when people start selling, we follow Moore's law, and other people start following selling, and people start panic selling, and essentially, maybe we'll see a 60, even 70% downside in one day, and everything plummeted to like $30, and you basically lose 70% of your portfolio in just one day. That could totally happen. You know what else could totally happen? All of us could just start holding, right? We're just holding. We're just using our diamond hands and just look at ourselves and be like, you know what? Hedge funds are evil. So what we're gonna do? We're gonna use our diamond hand and we're just gonna hold it until the end. And guess what? We might be able to see the $285 line, right? Or in this case, probably 250 is more realistic. But when 250 happens, are we gonna sell? That's a more interesting question to ask right now. And hey, this is the video for tonight. Hopefully it's very informative, which I think it is, because I talk about a lot of realistic stuff you have to think about. And for those of you who still want to, find something that's not as expensive as $70, Right now for me, I think what I'm gonna do is I'm just gonna be honest with you guys. I think around $66 is my target price range for AMC, and right now I don't really have a lot of couple of K holdings in AMC, right? I'm just gonna hold it right now because I'm like a small time YouTuber, right? But I still need to be an example for all of you diamond holders, diamond hand holders out there. And as someone who firmly believe in the ape community, I'm just gonna hold. And my average price, I don't know, around like 53 or $43. I actually haven't checked because I'm just gonna hold it. I'm just gonna hold it and not do anything and see how the massive psychology plays out. And and be mindful, I'm only playing with around 10% of my portfolio, even probably less than that, right? And then some of my other winnings are probably what offset the 60% lose, right, from here. And for those of you who are just YOLOing it, you really need to think about, you know, do you really want to actualize your return right now? Like, do you want to just like maybe take a portion of it? But the whole point of being a diamond hand is if none of us fold, then the hedge fund's gonna bleed out, and this is gonna be a huge, interesting storyline. We're gonna be in the headlines, boys. It's gonna be something like, hedge fund default, and then they're forced to cover, and their prime brokerages have to help them cover, and maybe the Fed's gonna come in and be like, hey guys, I know you guys bankrupt, and perhaps like a lot of AMC holders, you still own us, right? But the Fed's gonna probably pay us for a discount, uh, and then pay our shit, something like that. Or what could happen is it could be January, February, or March again, where Robinhood is gonna restrict how much shares you can buy every single day, and it's just gonna artificially drive down the price a little bit. So who knows? And tomorrow I think it's still gonna be a shiny, sunny day for AMC holders. Keep our diamonds and up, diamond hands up, and see where things goes.